Hello everyone, welcome to this week's edition of Midweek Market Update. I'm Ashley Roster with Victory Fiduciary, and today we've got quite a few things to get into. It's been a couple of weeks since we did our last update. Just kind of want to talk to you about some of the movements that we've seen in the market, kind of what some of those drivers have been, and maybe some things that we can be looking to as we kind of enter into this summer season, which, by the way, tends to be a weaker time period for the market. That just is how it tends to be. We tend to see, particularly July and August, tend to be sluggish months for the market. We tend to have even some short-term corrections in there. We'll have to see if that plays out for the summer. But so we've been seeing some movements within the market. We've also been seeing some rotations that we're going to talk about. And so, number one, if you were kind of paying attention to what was going on last Friday, you'll know that we had a pretty significant sell-off that happened in the market. Now, there were a couple of things that were going on Friday. Number one, which I actually forgot about until I kind of started diving in to see if I could figure out what was happening. Quadruple Witching Day was last Friday. And so that sounds like something that you hear at the end of October. But no, this is something that happens 4 times a year, specific days of each quarter. That's when all of the stock market's options begin to expire. They all expire on the same date. And so there's a lot of buying and selling and exchanges that happen on that day. We tend to see increased volatility, and so that absolutely played true for Friday. We saw significant volatility. We saw markets were significantly selling off. I'm actually going to kind of show you here this was the S&P 500, and as you can see, so this was Friday's action. We actually violated the 50-day moving average on Friday with the S&P 500 with those movements that we saw. And, a lot of what we've been seeing in the market comes back to what we've been talking about for months. And it's just the idea of inflation. As we begin to see inflation begin to pick up, and investors have to sort out if we think that inflation is here to stay or if this is kind of like transitory and that we're going to kind of go back to a deflationary marketplace. And so, but on Friday, we saw that sell-off happen. And again, we also were seeing some rotation. I'm going to show you another chart in a few minutes, just kind of showing, because we had seen a pretty big rotation out of the growth stocks, out of technology, into areas like energy, financials, more value places that would tend to do better in a higher inflation marketplace. And so everybody has been really kind of all eyes on the Federal Reserve, what Jerome Powell was going to say this week, particularly regarding kind of these inflationary movements that we've seen. As we have supply and demand chain issues, we still have a semiconductor significant shortage, so that automatically kind of artificially obstructs supply and demand, because now we're driving up prices because nobody can get a lot of these vehicles and different materials that we're trying to get. So automatically prices kind of skyrocket. We're seeing in the housing industry right now, as there's been floods of people moving from the cities going to the suburbs, and when there's not enough houses, that gives us the opportunity to kind of see prices increase, at least on the short term. And so this is specifically what Jerome said regarding inflation this week. And so I'm actually going to read this word for word because I think it's really interesting. Inflation has increased notably in recent months. This reflects, in part, the very low readings from early on in the pandemic falling out of the calculation. The pass-through of past increases in oil prices to consumer energy prices, the rebound in spending as the economy continues to reopen, and the exacerbating factor of supply bottlenecks, which have limited how quickly production in some sectors can respond in the near term. As these transitory supply effects abate, inflation is expected to drop back toward our longer run goal. And really, just to kind of paraphrase what he was saying, number one, we've got the numbers of when we were in a complete shutdown from the pandemic. Those numbers have now dropped off. And so we've kind of been able to see year over year obvious positive increases. But combining that with supply chain issues where we can't have enough production for some of these important things that we need to purchase, it's all kind of leading into these inflationary pressures. So from Jerome's standpoint, he seems to be setting the stage that he believes that inflation is transitory, that we are not going to have inflation running as hot as it's been running. And so this has kind of began to quell a lot of the concerns in the market as it pertains to the growth areas. I'm going to show you. So this is just kind of a tangible way to see this. This is one of the, just like the technicals that we use to kind of track relative strength and momentum shifts in the market. And so for a long time, especially when we look at the sectors here. So for a long time, tech was king. And so tech was always in that number one or number two position. And so as we began to see these inflationary pressures begin to kind of crop up and start causing problems, we saw tech begin to fall off this way. Areas like financials, energy, basic materials began to kind of push towards to having those higher readings. And so tech is now still kind of sitting like right here in the middle. We haven't seen a lot of movement, but it won't surprise me if in the coming weeks then that we'll see that maybe tech can kind of begin to rebound, because we saw a lot of short-term selling pressure, particularly in areas like technology, as related to, again, to these inflationary concerns that we've been seeing. So it seems like the Federal Reserve feels somewhat confident that in this inflation pressures that we're seeing, it's kind of a result of a couple of things kind of bottlenecking together, and that it is likely not going to be permanent, which again, that's very reassuring for investors, because remember, anytime we have rising costs, that really affects companies' bottom lines. It affects price to earnings ratios. And so kind of going back to where we were with the S&P 500, things this week a lot less choppy than they were last week. Again, we violated our 50-day here, but then we kind of sat right on it. We were able to have a nice little bounce yesterday and Monday. Today it looks like we're going to at least close a little bit higher. Now with the NASDAQ, so remember, the NASDAQ is more technology driven. You can see that over the past few months, the NASDAQ's technical chart is a lot more messy. And so that really is coming from the fact that inflationary pressures have been a huge concern for a lot of the NASDAQ 100 stocks. And so you can see that there are periods in March where not only did we violate the 50-day, I mean, we came right down in between the 50 and the 200 moving day average. Came above, couldn't hold it, came back down. And so the last time we really saw a significant sell-off in the NASDAQ was back end of May. And so kind of right around that time when investors began to wonder maybe inflation's not permanent, that it's really more transient. And then so you can see, so the NASDAQ actually went out today, was able to hit a new high today. And so we'll see if it's able to hold on to that. But again, just a reminder of the fact that so many outside influences really dictate kind of broad market movement, very much so like what we saw back in March, things like what we saw on Friday. And so as we're kind of coming into this last week of the quarter, we're still kind of getting more data just coming in, just regarding, as we're looking at consumer price indexes, and next week we'll be getting the jobs numbers for the month of June. And so hopefully we'll be able to see that the labor market is continuing its recovery. And so those are the things that I really wanted to get into, just the fact that inflation, deflation continues to be a really important metric that we should be following, as well as kind of watching these rotations. We went kind of from growth to value. Now we're beginning to see possibly that rotation go back to growth. And so these are things that we've been watching. And so I know I've been telling you we're really excited. We have a couple of really great professionals that are local, that are gearing up and preparing to bring you some really important, interesting content. So we'll be getting that out soon. Otherwise, if you have questions, you can always email me, ashleyr@victoryfiduciary.com. We'd love to hear from you. We'd love to answer your questions. Otherwise, I hope you have a wonderful 4th of July holiday, and we'll see you in 2 weeks. Have a great day.